Good evening, everyone. Thank you for joining into today's webinar. My name is Jyotak Nandwana, and I'll be hosting the webinar for you today. The topic for today is the Graphite Dream Run nearing an end? Now, before we begin the webinar, I would like you to spend some time on reading the disclaimer. So all it says is that the stocks that we'll be discussing in today's webinar, those shouldn't be considered as recommendation to buy or sell. All information presented over here is for educational purposes only and in no way should be considered as investment advice. All right, so this is going to be our agenda for today. As always, we'll be going through the current market condition. We'll be discussing about the action in leading as well as broader markets. And then we'll move on to our main topic, where we'll be giving you a brief idea about what were the reasons behind the rally in graphite stocks in 2017, how is the current year and the future looking for those stocks, and will the rally run out of fuel anytime soon. Towards the end, we'll be having a dedicated Q&A session. So I would request all of you to keep your queries reserved for this session. However, if you have any doubt which is very relevant to the current slide of discussion, you can always ask those queries in the chat box. Okay, so before we begin, a quick check if you're able to hear my voice clearly. All right, so most of you can hear my voice. I'll just quickly type in a message for people who are finding it hard to hear my voice. I'll just type in a message for them. It could be because of connectivity issues. All right. So the frontline indices have moved back to an uptrend. So the Indian market got back into an uptrend on July 10. The main reason for that was Nifty and Sensex both reclaimed their previous rally highs. So I'll annotate over here for you to spot the previous high. So this was the previous high, that is 10,929 for the Nifty. And on July 10th, it went above that level. And that's when we moved the market back into an uptrend. However, the approach, as we had highlighted in our commentaries, remains cautious because the distribution count, which keeps a track of institutional selling, is still high for Nifty. So it remains high at 5 for Nifty and at 4 on Sensex. And if you look at the action of foreign institutional investors, they continue to reduce their exposure in the Indian market. That's been the case for all emerging markets, and India has also taken a hit due to reduction in exposure by foreign institutional investors. Also in the index level, we see only few pockets doing well. So we have few leading private sector banks, few FMCG companies that are holding up the index really well. Also stocks from NBFC space. Now, while Sensex has already hit an all-time high, so it moved to an all-time high in yesterday's session, it hit an all-time high today as well, but Nifty is yet to hit the all-time high of 11,171, which it did towards the end of January this year. So we are still waiting for that to happen. Now, if you look at the broader market, the pain has been really over here. We have seen both mid-cap and small-cap indices correcting by a huge amount. So there has been a 30% fall in small-cap index, around 30% levels, and 20% levels in the mid-cap. So the current overhead supply, that is the difference between the current level and the all-time high, is 15.3% for the mid-cap index. The Nifty mid-cap continues to be in a rally attempt right now, so we are awaiting a follow-through day, and that has not happened. The good thing is that looking at the daily charts, we can see that a bottom has been established around 7,700 levels, but that is something which has happened earlier as well, so around 18,000, and then we had around 17,800. So what remains to be seen is that if the index is able to convincingly retake its 50-day line, it is currently just marginally below the 50-day line. So if it is able to retake that level, and apart from that, we also see strong price action in leading stocks, so that will kind of give us some confidence in the market. But right now it is trading below 50 DMA level. Of course, yesterday's action and today's action was really good, so that has allowed the Nifty mid cap to retake its 21-day line. Right. So what do you mean by follow through day? That's a query coming in from Anurag. So follow through day is a very strong up day in a market. So when we see an index going into a correction, what we actually want is it to stabilize, it to form a bottom. So for that, we look at an action of 3 days, so 3 straight days where the previous low is not breached. And after that, if we see a very strong update, that is known as follow through day. For that, the criteria differs at the index level. So for Sensex and Nifty, we use a cutoff of 1.5%. So if the index is up 1.5% on greater volume than the previous day, that makes it a follow day, and it signals a beginning of a new uptrend. Now, the caveat over here is that not all follow-through days will lead to market rally, but every market rally has begun with a follow-through day. So that's the reason why we closely track follow-through days. Okay. Yeah, this happens at market bottoms and not at market tops. So this is one indicator which we use to analyze if the market has formed a bottom. Give me a minute. There are a few people who are still facing audio issues. All right. So today's action, as I said, was quite good, but still the index is below its 50-day line. We would want to see the index retaking its 50-day line in coming sessions. Now, at the small cap level, the overhead supply, which is the difference between the 52-week high and the current price level, is much higher. So it's at 25%. The good thing is that today's action was quite good. So we had more than 2% gain in the index. It retook its 21-day line, but still it continues to trade below 50-day and 200-day lines. So for now, we'll be really watching if the index is able to retake its 50-day line in the coming few sessions. Apart from that, so this is at the index level, but we also want to look at what leading stocks are doing. And that's the reason we also track the number of weekly stock breakouts. So this will give you a fair idea as to how many number of stocks are actually breaking out of their consolidation-based patterns and moving into new highs. So you can see how the number had actually dried up when the markets began to correct. And there was, of course, a little bit of strength in mid-cap and small-cap during April. That is when the market recovered a bit. But then again, all those stocks actually, most of them gave failed breakouts and went back again to lower levels. So you can see how the number of weekly stock breakouts have dried up. But we had good number of breakouts in the week ended July 13, and most of them were actually from large cap space. So that's where the strength has been. Of course, from the mid cap and small cap, we do not see a lot of stocks breaking out. This week, we have already had 6 stocks breaking out. Some of the quality stocks have broken out this week. So the action seems to be, if we just go by the number of stocks breaking out by this week, so we have already had 6 stock breakouts. So if we go by that, the action seems that things are beginning to stabilize after a 6-month choppy movement. And having said that, we still want to wait for a follow-through day before getting really aggressive in the markets. Right. So we'll begin with the main topic now. We always like to have a quick check on what the market is doing, and that's the reason why we always discuss about the market condition. M is the most important factor in canceling style of investing. All right. So as you all are aware that graphite was the story of 2017, and the main reason for that was there was an unprecedented demand and supply imbalance for graphite electrodes, and all the reasons are listed out over here. So we'll be looking at what actually fueled the rally in graphite electrodes in 2017. So as I said, mainly because of huge demand, and there was huge demand, and then there were supply constraints as well. So there were both these factors actually driving the prices higher. Now, on the demand side, we had China coming down heavily on polluting steel plants. So China is the leading producer of steel, and almost 50% of global steel production comes from China. Now, because of environmental concerns, the Chinese government came really hard on polluting steel plants. So all those plants which produce steel using induction furnaces, blast furnaces, those were actually shut down in China, and close to a capacity of around 270 million tons was actually shut down because of pollution concerns. Now, because of that, what happened was, so there was a steel shortage, China being the leading producer, there was a steel shortage, and globally, other countries started increasing their steel production. Now, one important point over here is that while China prefers the route of blast and induction furnaces for steel production, globally, 45% of steel is actually produced from electric arc furnace. And that is more environmental friendly. It requires lower capex also, and can be run at lower costs as well. Right, and because of that, because of the disruption in the Chinese market, global players had to increase their steel production, and most of that came from the electric arc furnace or the EF route. Now, in electric arc furnaces, to produce 1 ton of steel, you require 2 to 2.5 kilograms of graphite. Now, that's not a very big quantity if we look from raw material cost point of view. But still you require that because it's quite indispensable in nature. So that's the reason why graphite electrodes were in high demand in 2017. So not just the steel plants, the old steel, conventional steel plants which were shut down in China, but also China came down heavily on graphite plants as well. So there was around 300,000 tons of capacity, graphite capacity, which was closed down. So that caused a supply constraint. And apart from that, we of course had high demand coming in from new steel capacities via the EF route at the global level. So these are the reasons briefly which caused a surge in graphite prices in 2017. Now we also had the needle coke prices, which is a key raw material. So this is what I have listed down over here. So you can see crackdown on old polluting steel plants. So that resulted in a 31% drop in Chinese steel exports in 2017. Of course, that had to be met by other countries which prefer the EF route. So that fueled the demand for graphite. Next, as I already mentioned, there was a closure of 300 tons of graphite capacity in China because of environmental concerns. And if you look at in the last 3-4 years, what had actually happened was, so graphite was not being preferred. The main reason for that is the steel production from induction blast furnaces and blast furnaces actually took a lot of favoring, because that was favored much because China increased their capacities continuously, and as a result of which it caused unfavorable business condition for graphite as a commodity, and that resulted in shutdown of 6 graphite plants in Europe and America that had a total capacity of 200,000 tons, and this was during 2014 to 2017. So already we had a scenario where capacities were brought down at global level. Then we had capacity shutdowns in China, and then we suddenly had a huge amount of demand from the EAF plants, and that's the reason why graphite rallied. And one important factor over here also is that there was a surge in raw material costs. So needle coke price actually multiplied 4 times, and that is also mainly due to tight supply and huge demand from lithium ion battery makers. So all those batteries which are being used in electric vehicles, they have needle coke as a raw material, and you already had graphite players looking for needle coke, and then you had electric vehicles coming in, the battery makers, lithium ion battery makers coming in for needle coke, and that kind of resulted in a surge in raw material costs, surge in prices of needle coke. Now, needle coke accounts for 60% of total production cost of graphite electrodes. So you can understand, if the raw material price goes up 4 times, of course, that will cause graphite prices also to increase. So that was one of the reasons. And one more thing that one needs to be aware of is the fact that both graphite and needle coke, these industries are quite oligopolistic in nature. So we have only few players actually controlling a majority of the production output. So when you have such an industry, you can of course control the prices, and that's the reason why the costs were actually, the rising costs were actually passed on to the consumers. Now, so who are the key beneficiaries of graphite surge? Of course, in India we have these 2 names which have become stock market darlings, and you saw HEG and Graphite India rallying a lot. Now, you can see a quick snapshot as to how much capacity both these guys have, and both these companies have, and how much was the sales growth and EBITDA growth. So sales grew 207% for HEG, so that's more than 3 times. We had EBITDA growing at 1,873%, so that's humongous, and that's unprecedented in nature, and that's the reason why the stock price rallied by 1,330%. For Graphite India, the sales grew 114%, EBITDA grew 1,117%, and stock price rallied 548%. So these were the top gainers in FY 2018, and we have also covered these stocks in our top winners of FY 2018, a report that we have made and will be publishing soon. Right. So how is 2018 shaping up? We all know that all these stocks have rallied quite a lot, and now the most of us might have also missed this rally. But now, as investors, what we'll be really concerned with is there any more upside left, or is are the stocks going to go lower from here? Now, what we have seen is, I'll just quickly go back to the previous chart. You can see over here that the stocks actually underwent a consolidation. So that's something which is good, because there was a huge gain over here, and now you can see that in the last 6 months the stock didn't do much. So that is really important, because you have all the short-term weak holders actually getting out of here. And if you see below average selling, so that of course gives an idea that the serious guys, the big money managers, are still in the stock and they continue to hold it. Over here also you can see for Graphite India how it underwent a consolidation. So it didn't do much for 6 months, and we had a few weeks where the stock went down on below average volume. But what we also noticed is that despite the carnage in mid cap and small cap stocks, both these stocks are actually back again at their new highs, right? So we had a 30% odd correction in both these stocks, and they became a part of the ASM list also. So that obviously had a huge impact on liquidity, which caused a drawdown of 30% in those stocks. But both those stocks, after briefly consolidating, they're back at new highs, and that's the reason why we got interested in those stocks again. Now, on fundamental front, both companies are actually expected to fetch better realizations. Now, the main reason for that is while last year graphite electrode prices, so just to give you an idea, those graphite electrode prices in spot markets actually rallied from $2,000 per ton to $30,000 per ton. So that's a 15-time gain in the prices. But what happened with the graphite electrode manufacturers was, since they were in long-term contracts, so they were not able to actually make good use of those high prices. Now, the thing that we have noticed in graphite companies is they have revised their contracts. They are getting into shorter term contracts because needle coke continues to be in tight supply, and until and unless they're aware of what levels needle coke is going to trade, they can't actually set the prices for graphite. So that's the reason why they are now favoring short term contracts. So these contracts are now of periods of say 3 to 6 months, so not very long term in nature. Those are not of 1 year, 2 years as those used to be earlier. And with that, once you have revised contracts in place, that will obviously give you better realizations. All right, so going ahead, what are the things that are actually looking good for graphite? So quickly reading up some of the notes on graphite, I found that EF route is actually gaining prominence. So as I said, 45% of the global 45% of the global steel production comes from, now this is excluding China, 45% of global steel production excluding China comes from the EF route, right? In China, that level was only 6% in 2016, which increased to 9% in 2017, of course, because of environmental concerns. Now, going ahead, China has a strict target of producing steel via EF and producing at least 20% of their steel via EF route. So that will obviously cause a huge demand for graphite electrodes. Apart from that, what has also happened is that China has brought in a steel replacement policy. So that is the 1.25:1 policy, which requires shutting down of 1.25 million metric tons of old steel capacity, that is the blast furnace, for every new additional 1 million metric ton of capacity, which will be from the EF route. So if you have the EF steel production for China rising from 9% to 20%, so that will obviously lead to higher demand for graphite in China. So that is one thing. Now, apart from that, also what is going to happen is the Chinese graphite exports are going to decline in coming years. The reason for that, as I have already stated, is EF steel production expected to reach 20% by 2020 from current 9%. Now, because of that, the graphite electrode demand is expected to rise, and the Chinese graphite electrode exports, which stood around 200,000 tons, are expected to come down to 80,000 by 2020. So all those new capacities which will be coming in outside China will actually, the graphite requirement will actually be met by other countries. Some of it will only be met by China, that is around 80,000 tons. Now, needle coke prices are also expected to remain high because as I said, that there are only few players controlling the needle coke market, right? And every additional capacity that comes up for needle coke is actually being demanded from lithium ion batteries. So if you have any increase in capacity coming up in needle coke, that will be actually fulfilled. The demand will be there from the lithium ion batteries, and that actually will keep the prices high in the near future. So for graphite electrode also, we believe that since the needle coke prices will be high, the graphite electrode prices will continue to be high. And one more important thing over here is that there are very high entry barriers, both mainly because of technological reasons. So if we look at the new plants that have come up in the graphite industry, going through HEG's annual report, it was mentioned that no new plant has actually come up in the last 41 years. So HEG has a history of 41 years, and HEG was actually the last entrant in graphite industry. So that is something which is quite important over here. And apart from that, also what I also read was the fact that if there is any additional capacity, if there is any new capacity that is expected to come up, it will take at least 4 to 5 years. So any greenfield expansion will take at least 4 years before it could be up and running. So that provides huge entry barriers in the graphite industry, which makes it ideal for the existing players to make the best use of rising graphite electrode prices. All right, so this is what I was talking about. So the China graphite electrode production. So this gives you a clear idea as to how the export is expected to decline and the consumption is expected to rise because, of course, the EF route is going to gain prominence in China. Now, one more thing which I would like to share over here is the fact that the Chinese exports are actually not in very high demand as far as global market is concerned. The reason for that is there are two grades in this, and the high quality graphite electrode which is produced by HEG and Graphite India is actually much more in demand because that enables better quality of steel production. However, the Chinese graphite electrode manufacturers, their technology is not quite up there, and the graphite that they produce is actually not in much is not of better quality, and that's the reason why whatever they produce will actually be ended up used in China only. So not a lot of demand will be fulfilled by the Chinese graphite players in the coming years. Now, as I said, it's an oligopolistic industry, so we don't have many players. There are just few players who control the graphite electrode market. And the overall global capacity of graphite electrodes is around 800,000, so 700,000 to 800,000 tons, and this excludes China and Russia. Now, for Russia, what happens is whatever graphite they produce is actually consumed by the Russian steel plants. So that's the reason why Russia is taken out of equation. And next we have China, where we are seeing that most of the graphite that will be produced by China, which will actually be consumed in will actually be consumed by the Chinese steel plants. So that actually helps the Indian manufacturers because the additional demand will have to be fulfilled by the Indian players. So Indian graphite manufacturers control around 20 to 22% of the overall global graphite market. So that's their production level. And the amount of gains and the amount of, because of higher realizations in FY 2018, allowed both these players, so both HEG and Graphite India, to actually consolidate, to actually strengthen their balance sheet. So both these players have zero long-term borrowings, so they have improved their debt profile, so they don't have any long-term borrowings, and Graphite is very well positioned in terms of cash, so they have huge amount of cash with them, and that's the reason why I think a couple of days back there was a news that Graphite will be eyeing acquisitions in the industry. So that will of course take the supply higher, and that also gives an idea as to the company itself is confident about the overall graphite market, because in an industry which had actually seen capacity shutdowns during 2014 to 2017 due to unfavorable business conditions is now turned upside down, and that's the reason why Graphite is exploring acquisition opportunities. So that was one thing. Apart from that, HEG is also planning to expand its production capacity. Now, one thing good about HEG is the fact that it has only one manufacturing capacity, or one manufacturing plant, and that has a capacity of 80,000 tons. Now, it's the single largest manufacturing plant across the world, and the only company that operates with such a high capacity from just one plant. And they are also planning to increase that capacity, which will take around 2 years time. So by 2020, they're planning to increase their capacity by 25%, and take it higher to 100,000 tons. So that's how they're planning to make use of all the amount that they have realized, and have improved their balance sheet position. Now, just a few key takeaways. So what we believe is that graphite prices are expected, they will remain buoyant in the near term. And the main reason for that is there continues to be a supply constant. We don't have many players. And of course, the new plants will take a lot of time to come. So there's a long gestation period for that. And by the time the supply increases, we'll obviously have 2-3 years gone by. Apart from that, for both HEG and Graphite India, we have revised contracts which will actually fetch better prices. So we won't be surprised if they continue to report really good results going forward. HEG and Graphite both will be the major beneficiaries of decline in Chinese exports. We had seen that chart where Chinese exports of graphite electrodes are going to come down in the next few years as the EF route gains prominence in the Chinese market. And as I had already mentioned, that Graphite is looking for acquisition opportunities, while HEG is expanding its capacity by 25%. So that will be done around 2020. So those are the key takeaways. And now I'll quickly move to how both these stocks are actually looking. So I'll open up MarketSmith India and quickly show how these stocks are doing right now. All right, so let's look at the weekly chart. As you can see that one of the good things that I can see over here is that after going through a consolidation for 20 weeks, so that's a 5-month consolidation, even after breaking out, you can see how the stock found support at the 50-day line. So that's really important, because with all high quality stocks, this is something which we have noticed in the past and continue to notice now as well, that they find support around key moving average levels, and how nicely it has bounced up from there. So it broke out recently, and it is currently trading around its pivot price of 906. So it's 7% above that level. And when we look at HEG, both these stocks are actually very highly correlated. So they tend to do similar things. And that's the reason why we have seen in HEG also broke into new high ground, strong support around 50-day line. You can see how it reclaimed and started moving higher from there. And apart from that, we can see that this is also very close to its pivot price of 3,700. Now, the only thing over here is that we had, of course, looked at those stocks from model portfolio perspective as well. And with commodity stocks, of course, both these companies don't want to be related to be a commodity player, because in HEG's report, I had read that graphite at one point of time was actually a commodity, but now it is no more a commodity, and it is something which is an essential in steel making process via EF. So that's the reason why they still remain quite optimistic about their outlook, but that's something which every company wants to believe. But if we analyze it from a portfolio point of view, you can see that these stocks have had a huge rally last year. And even if you look at how far they're trading from their 200-day line, that is something which is not a small amount. So graphite is, HEG is around 46% above its 200-day moving average, while graphite is around, is also around same levels. So that, of course, is a bit risky in nature. But from an investing point of view, of course, if the stock comes down and bounces back from its 50-day line, or is available in idle buy range, of course that can be considered, that can be looked at that point of time from a fresh buying opportunity. But again, this is just for education purpose and not a recommendation to buy this stock right now. All right, so I'll open up the session now for queries, and you can send in your queries using the chat box. Okay, so there is one query from Venkat regarding VIP Industries. So the stock had really good action in today's session, and it in fact broke into new highs today out of a flat base pattern. So in terms of fundamental, I'll just open up the chart in MarketSmith India. Yeah, so there you can see a good breakout, huge volumes, and the stock available in idle buy range. So this blue range denotes the idle buy range. So in terms of fundamentals, VIP, of course, is a key beneficiary of the movement that's happening from unorganized to organized players. There are many measures taken by the government that has actually benefited organized players, be it GST and be it demonetization. Of course, GST is the main reason why it has created a level playing field, and that has allowed organized players to compete at better prices, better price points with the unorganized players, and VIP is a key beneficiary. So if you look at the luggage industry in India, the unorganized segment accounts for 70%, so that's huge, while the organized segment is just 30%, and in that 30%, VIP has a market share of around 50-53%. So it has more than 50% market share in the organized segment, and there is a huge runway of growth if the organized players are to capture market shares from the unorganized players. One more thing that I like about VIP Industries is the fact that it caters to all the income groups. So be it low income group, be it middle class, or be it high and upper middle class, the company has brands for all those groups. So Alpha and Aristocrat is owned by VIP, so that takes care of the low income groups. For the middle class, we of course have the VIP brand, and then for upper middle class, we have Sky Bags and the Caprice Bags, which is a ladies segment. So both in terms of fundamentals as well as in terms of technicals, VIP Industries is looking quite good. All right, so a lot of queries have come in as I was discussing VIP. So there's one query from Puneet regarding target price for HEG and graphite. So it's really tough to actually determine the target price, and we as an institution, we of course do not give target prices, because we all know that the future price will be is a function of both what's going to be the earnings at that point of time, and what's going to be the perception of the market. So is the market willing to pay a 10p, or is it willing to pay a 20p? That is something which will be only decided in future. In terms of earnings also, we expect good earnings growth in both, strong earnings growth in both HEG and graphite, mainly because of the fact that while graphite electrode prices must have stabilized in the spot market, but they continue to revise their existing contracts, and that is something which will boost both their sales and earnings in the near future. All right, so next up is a query on Bajaj Finance. So let's discuss the stock. Of course, this is one stock that is a perfect canceling stock that has rallied huge in the last 5-6 years, and you can see how nicely it has maintained its uptrend. The company continues to benefit as it goes deep into India, so it starts covering towns and rural areas, and it's a leader in when it comes to financing in consumer durable space. So Bajaj Finance no doubt has strong fundamentals, but one needs to consider the fact that if you look at the breakout from its double bottom base, it has already run up a lot, so it has gone up 40%. Of course, it has reported really good results in the quarter gone by. But having said that, the stock has actually gone into a profit booking soon, and entering at these levels will be quite risky. So I would wait for the stock to come down to say, let's say it's 21-day moving average, or even if it reaches that, I would wait for a rebound from the 50-day line before making a fresh entry in the stock. Okay. Next up is Maruti Suzuki from Praful. So Maruti Suzuki will report its results day after tomorrow. It is coming close to hitting new highs. So it's a part of our model portfolio. We had added it when it cleared its previous high of 9350. So we took an aggressive entry in the stock over here, and since then it has done decently, and we are sitting on a profit of 3% now. Looking at making a fresh position in the stock, I would stay away from it for the next 2 days. We all know that the result season could make it highly volatile, and I wouldn't consider getting into the stock just away. But if it breaks out into new highs and the results are good, that might give you a very good buy point in the stock. All right, so there are a lot of stock specific queries that are coming in, so I'll try my best to answer as many as possible. Yeah, so there is one query regarding Showa Denko carbon plant by Shave. So of course, yeah, so they are increasing the capacity by 30,000 tons by end of 2018. So that is something which will of course kind of increase the supply for graphite electrodes. So that's the reason why you need to be very careful when it comes to all those commodity related stocks, because as you see players start increasing their capacity and additional capacity coming into picture, and we don't have a lot of demand for it, then you need to be really sure. So with commodity specific stocks, I would suggest all users do not wait for fundamentals to deteriorate. Always wait for technicals. We do that for all stocks, but for commodity, you need to be really very, very careful with that. So even if you have bought graphite and HEG, and if you notice that the stock is breaking below its 50-day line, breaking its 10-week moving average on high volumes, make sure that you come out of it, and you can always make a new entry as and when a new news comes out in the market and things start looking good again for those companies. So be very careful with your positions in these stocks. Okay, so there is one query from Raj regarding mid-cap stocks. So Raj, all the mid-cap stocks, as we all know, have undergone a huge correction. And if you just look at from the price point of view, you might feel tempted to buy them because most of the stocks are now available at say 20-25% below their previous highs. But make sure that that doesn't make you biased towards those stocks, because what you need to take into account is the fact that there has to be demand coming in for those stocks. And we have seen FIIs actually reducing their exposure in the Indian market, and there's not a lot of institutional demand. And of course, the mutual fund reclassification thing has also hit the small cap and mid cap stocks badly. But what you need to do is that just make sure that you're looking out for a follow through day in mid cap and small cap. You're also keeping an eye on new stock breakouts. So how many stocks are breaking out? What's the action in leading stocks? If all those things starts coming up, and we see all those things happening in the market, then you might want to get aggressive in mid cap stocks. But right now you need to still give it some time. All right. Next up is a query on Bata India and RBL Bank. Both are part of our model portfolio. So Bata India, just like VIP Industries, is a huge beneficiary of the movement that's been seen in from unorganized to organized. So that's the story with a lot of consumption related stocks, and Bata actually broke into new high ground, and it reported really good results also. So we had around 37% growth at net profit level, while sales grew around 8% levels. So another good thing which is happening with Bata is they are undergoing an image makeover. They are really getting aggressive in terms of product premiumization. So they want to add more premium products in their profile, in their portfolio, and that is something which will drive margins as well as earnings in future as well. Again, a very strong brand in the Indian market, not very much popular among the youth, and that's the reason why they have taken up the challenge of image makeover. And this is something which can be related to VIP Industries quite a bit, because VIP has been in the Indian market for a long period, and VIP is something which is well known to say people in the age group of say 40-50 than people in the age group of 20-25, and that's the reason why they have Skybags and Kippies and all those other brands that are more popular among youth. With Bata also, I feel that is something which will be beneficial going forward, because they are focusing on premium products which are more popular among youth, and they have a lot of other brands. They own a lot of brands, so they have Hush Puppies, and they also own a children's brand, so which is known as Bubble Gummers, and they are going very aggressive on that. So I feel Bata is really good, looking really good right now, and all those steps that are being taken by the management, if they pay off well, Bata will do really well in the coming future. So stock was available in its idle buy zone just few sessions ago, and of course those who had added when the stock broke out would be sitting at a profit of 10%. Right. Next we have is right. So there was a query on why Graphite and HEG will be affected by ASM. I had read it. So yeah, anyway, so with ASM, of course, the liquidity will get affected mainly because that it requires 100% of margins to be available for doing an intraday trade in those stocks, and that is something which is not preferred by intraday traders. Of course, you want to trade with lower margin requirement, and so that might reduce the liquidity. And if you just I think that's the point that I would like to make by just looking at it. So you can just see how the volumes have actually gone down in those stocks. But the good thing about so these are the red line is the average line, and you can see how since June 1st, that's when it was placed in additional surveillance measures, so ASM, and you can see how the volumes have actually dried up after that. And there were 3 back-to-back lower circuit sessions in those stocks, and that is something which I'm really concerned with those stocks, because you don't want to hold a stock. Of course, you might want to hold a stock as long as it is hitting an upper circuit, but certainly not when it is hitting a lower circuit, because you don't get a chance to sell it. Right, but if you look at how those have rebounded on higher volume, so that of course gives some confidence. So that's the reason why ASM is not good in terms of liquidity for those stocks. Yeah, so Ram is asking what will be graphite pricing in future. So Ram, that is something which I wouldn't predict. We are not into prediction. We would like to be more inclined towards interpretation. So all the things that we discussed in today's webinar, that of course give a rosy outlook for graphite stocks, for graphite electrode prices. But then even let's say an announcement by a big player, right? So if a big player announces that we are going to increase our capacity by 50% in the next 2 years, right? So that will obviously have an impact on graphite prices, and then that's going to have an impact on graphite electrode. Right now, if we look at how the things are looking, how EF is gaining prominence, and of course in the future as well, EF share will continue to rise. There was a period during 2011 to 2015-16, if I'm not wrong, where EF steel plants didn't grow much. So they actually grew at a slower pace compared to the total steel output. But now again that cycle has turned, and EF steel output is increasing at a much faster pace than the overall steel output. So that is something which is a very good positive for graphite stocks. But again I said, the risks are also there, and with all commodity stocks, you certainly have higher risks, and these stocks, that's the reason why these stocks tend to be higher beta in nature. All right, so NCL Industries, Sudarshan has a query on NCL Industries. I don't know much about the stock as far as fundamentals are concerned. So just looking at the numbers, haven't been reporting earnings growth for the past 3 quarters. Sudarshan says that a lot of brokers have actually given a target of 500. They have given a buy call on the stock, but I wouldn't be looking at this stock until unless there is earnings growth in it, and there's something new that's happening, which will help the company in reporting sustainable earnings and sales growth going forward. So broker calls, of course, can be tricky in nature, right? So I'm not sure if that's a good advice to heed to. Honeywell Automation. So Dassagir has asked about Satna Nitrochem, and Vittal has asked about Honeywell Automation. So I'll look at both these stocks. I'll take up Honeywell first. All right, so Honeywell has seen some good buying interest in recent sessions. It has even broken out of a base pattern, and it reported really good earnings growth in March quarter. So just keep an eye on. It has actually traded very tightly over here, so that's a very good action over here. So Honeywell seems decent to me, but I'm not aware about when the company is reporting its results. So keep an eye on if the results are not very close by. All right, so Rain Industries, Goa Carbon and Phillips Carbon. So Venkat has asked about this. I'll first cover Satna and then move to this. So it's a low cap stock, Sadhana Nitrochem, and so it's a 500 crore company. It doesn't meet MarketSmith India's market cap and liquidity criteria, but has had a very good run. I'm not aware about the story, but from technical point of view, this looks really good. If you are currently holding this stock, I would suggest you might be sitting on a good gain on this, and the 50-day line will serve as a sell signal. So if a breach happens on high volume, you might want to sell it. But if you're considering to add to it right now, I would suggest that you wait for the stock to form a base pattern. Now, if you look at it, it has gone up 150% from its previous breakout. It is bound to take some rest, and it might consolidate for some time. So no point getting into a stock that might consolidate for say 1-2 months, 3 months, 4 months. We don't know. So it's always better to wait for it to consolidate, and then you can always get into it. All right. So Anup is asking if graphite is an exit or hold. So if you are holding it right now, I would suggest keep holding it. I wouldn't suggest to get out of it right now. But as I said, you need to keep a close eye on what other players in the same industry are doing, and that becomes really difficult for a retail investor to do that on a daily or weekly basis. So that's the reason why I would suggest you to keep a stop loss in mind. So if you're sitting on a profit, of course, you need to keep a sell trigger in mind. So for me, I would, if I'm sitting on a good gain on a stock, I would wait for the stock to come to its 50-day line, because that's where we have noticed that high quality stocks actually find good support. So you can wait for that level. If it reaches that, maybe you might want to come out of it. So there was a query on Rain Industries and Goa Carbon. So both these stocks were key beneficiaries of huge demand for calcined petroleum coke, and that's the reason why they had rallied. Of course, the sentiment of ASM and uh, uh, that had impacted, and you can see how the volumes have actually gone down, and it is currently looking in a downtrend. I wouldn't get into the stock right now. Again, I would wait for a base formation and a breakout from there before considering it. I'm not very much sure how the company is doing. So in terms of earnings, of course, last year was quite good, but the outlook as such is something which needs to be further studied. All right, so I'll quickly look at Goa Carbon as well. So looks pretty much similar to Rain Industries, and I have a same opinion for that. And one more was Philips Carbon. If I'm not wrong, Philips Carbon had a very good session today. Yeah, so this is something which you want to notice in stocks, because after being, say, in a downtrend or after moving sideways for a long period of time, if you see that those stocks are, retaking their important support levels, pay attention to it. But then also look at the fact that, it has come down from levels of 318 and currently trading around 227. So there's a good amount of overhead supply over there. So by overhead supply, I mean it is down 15-20%. It's down 30%, I'm sorry, from its all-time high. And when you have high overhead supply, so people who have bought over here as the stock was going down would be tempted to sell as they see they're getting from a loss of 15-20% to a break-even point. So they might want to sell, and that's the reason why all the stocks that have actually undergone a downtrend will face selling pressure as they try to come up. So, but the good thing over here is that we have seen a retake of key support levels. Okay, so what's the best indicator to predict stock movements? And this is something which is quite subjective in nature. See, over a long period of time, you obviously know that earnings growth drives stock prices. So if you have earnings, stocks will go up. Same happened with HEG and Graphite also. We saw how EBITDA and how earnings grew at a really huge growth rates, and that's the reason why stocks also moved up. Over a long period of time, it's the earnings growth, and that's the reason why in CanSlim we screen stocks on the basis of earnings growth. Do they have solid earnings growth of say 20-25% or not? So In the short term, of course, you might want to see a stock breaking above key resistance level, and there are a lot of things that you can use. People use hourly charts, people use intraday charts, people use daily, weekly charts, and see the resistance level. But what I have noticed is that the the pattern recognition technique allows you to find what's the most important resistance level, and once the stock is breaks out of that most important resistance level, uh, it certainly has and of course that breakout has to come on high volumes, then it certainly has some legs to give a 20-25% return. So that is something which we noticed in Bajaj Finance also. It broke out of a double bottom base, and it had the earnings growth as well. And while a lot of people who would say that the stock is overvalued and trades at a high price to book ratio, I certainly feel that if it has the earnings growth, you might see a valuation expansion in such stocks, and the stock has given good returns after it broke out. All right, so this was our first webinar where we actually thought about discussing a particular industry. So do let us know if you like the webinar, and also before we wrap up the session, I would want to know what are the topics that you would like us to discuss, so you can quickly give your preferences. You can send in your topics in the chat box, and we would like to take up those if there is high demand for those topics. I hope you had a good session, and it was fruitful for you to join us in today's webinar, and we'll be soon interacting with all of you in our next webinar, which is scheduled on August 7th. Now, with respect to queries, I'm sorry I couldn't answer all the queries because of time constraints, but you can always use the Ask MarketSmith feature to raise your queries, and we'll be happy to get back to you.